The market is within striking distance from all-time highs, and yet you may have noticed that Nvidia, well, it's practically dead. It's still well below its earnings gap high, and it's even below its previous breakout level. So how could it be possible that the one stock to rule them all is underperforming so badly, and yet markets still look okay? It's the great replacement theory, and it's technically bullish for markets. So welcome back to the Trade Brigade Midweek Show, where we'll take a look through all of the data points, including some of the new AI leaders, and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 7 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off tonight with a closer look at the SPY daily timescale, and honestly, there's not much to update here. If we're taking a look at the sessions this week, you can see that we've formed a rough 3-day balance range, not really making substantial new highs or new lows for that matter. In terms of the daily trend count, we're still in the process of changing the trend to up. We had these previous lower highs, remember this rejection at the 20 SMA on the Nvidia earnings gap up, and we basically made a huge new lower low. Well, since then, it's been a V-shaped recovery into brand new higher highs relative to that, of course, lower high happening here. That was the Friday session of last week, and we're still sitting at that equal high. You could split hairs with me if you'd like and call it a higher high, that's fine. But the main illustration that I want to point out is that this V-shaped recovery off the lows has not yielded an hourly downtrend, and therefore we still don't technically have a firm daily higher low in the trend count. At best, we might call this a soft higher low, and I'm not going to sit here and argue that the market needs to find a higher low. At some point it will. However, it doesn't need to happen before continuation in the upward direction. Certainly not suggesting that a pullback looks imminent, certainly not based on today's daily bar close, but if, let's play the hypothetical here, if the market rejects this previous high and has some substantial pullback, the hourly trend flips down, I would still be more optimistic seeking a daily higher low at 675, 674, the lower edge of the weekly expected move, the daily 20 SMA in orange and the daily 50 SMA in blue. It would also keep us over the bearish engulfer high from 1120 as well as 1010. So if this were to take place, I would seek buyers here, set the daily higher low, and let's see if this trend can continue in the upward direction. I will caveat that if this level does break, if the market snaps through this for some reason, it is still possible to find a daily higher low here, right? If we're counting from lows, potential higher lows, the trouble, of course, becomes if you rally and retest this and somehow find a lower high, it complicates the issue. Let's not get overly bearish before we need to. We'll deal with this situation when and if it becomes a reality. But for now, we have closed over or just sort of near the highs of the balance range. If we break out over the top end of this 685 previous pivot high, a quick range double, which is always the sort of quick measured move from a balance area, would put us basically at all-time highs. So it is possible that exiting this balance range on a Brigade bolt over 685, we should be targeting the all-time high at 689, 689.70 is the technical all-time high happening there. Beyond that, you're really dealing with the upper edge of the weekly expected move, which is roughly 693. So the charts do look bullish, and we do know that if the market pulls back underneath this 679.50, it's still possible to set a daily higher low, and the best place would be here at 675. Let's take a look through some of the new AI leaders though, because I understand, right, it's kind of weird to say brand new all-time highs and yet Nvidia's daily chart looks like this. I mean, that's abysmal. Underneath the daily 50, underneath the daily 20, well underneath the earnings gap up high, underneath this breakout point that we were referencing in the intro there. But take a look at some of the new leadership. I mean, some of the obvious ones are just Google to start. Google has been a new AI leader as it's broken out of here on the whole TPU narrative. We can go ahead and take a look at something like ASML, which has really proven itself over the last couple of trading days. This is brand new all-time highs for ASML. We can also go over to AMAT, Applied Materials here, brand new record highs over in Applied Materials. So as the baton gets passed and the AI rotation is taking place, it's pretty difficult to have a bearish stance on the S&P 500 and oh my goodness, we're going to crash and burn and go to zero. Another reason why it would be fairly difficult to have a bearish stance on the S&P 500 in particular, anybody know the answer before I say it? Well, I'm going to sort of jump the gun and get into our sectors already, but the XLF had quite a day today, up 1.15%, and that's the second heaviest weight sector in the S&P 500 with some of those big banks, JP Morgan. JP Morgan is actually the laggard of the big banks, but Goldman Sachs back up to highs, Morgan Stanley back up to highs, Citibank back up to highs, really looking good there. So the rotation narrative is kind of keeping this market afloat, and it's preventing me at least from becoming a mega bear amidst a trend reversal and potentially aiming at all-time highs on a possible balance range break, which is well within striking distance from a measured move breakout. Let's take a look at the hourly time scale and quickly take a glance at where we're at trend-wise here. What I would point out is that there were really two opportunities for sellers to take control of this market, and I'll even go to a 5-minute chart to point this illustration out. On Tuesday, the big illustration was here, right? You had this broadening formation that actually started to get a bear flag after the breakdown inside of the afternoon consolidation from Monday, and yet what happened? Were sellers able to capitalize on that and break down underneath the Monday low? The answer, of course, was no. And then again this morning, on the fake news from the Microsoft headline that, oh my God, we're sort of cutting the sales quota for AI names, or AI products rather, that headline traded organically for about a full hour before at 10:30 Eastern time, Microsoft came out and said, no, that's fake. We never said that. So in the full hour before they sort of clarified and said, no, that's not a real headline, what did the market do? I mean, sellers had every reason to say, oh, here we go. The AI trade's over, crash and burn. It's got to go to zero, right? And we saw that as the initial reaction in the pre-market. I just quickly flip over to the futures. That headline comes out and market goes straight down, right? So to see the regular trading hours trade, again, organically for a full hour, no break underneath the Tuesday low, no attempt to Brigade bolt here under the premise that, wow, AI sales at Microsoft, one of the top dogs in the S&P 500, is going to get revised down. To not see that is just a pretty clear indication that stronger sellers are not participating in this market, and these fears of like AI bubble have been completely put behind us. The Burry trade and the, oh my goodness, the depreciation schedule is like all out of whack. That's just like a moment in time, and just like that, it's already gone. Right? So the organic price action alone is telling the story that stronger sellers are just not here. Sellers had a couple of reasons to take the market lower this week, Tuesday morning, and then this morning on the Microsoft headline. It just didn't happen. And instead, we're seeing this stable grind through the afternoon in the upward direction on a rotating market, which is bullish, in my opinion. So in terms of the hourly trend count, we're still in an uptrend. I mean, again, it's been a V-shaped recovery off the lows, just balancing up here towards the highs. You could make the argument for an hourly high or low being ideal over 682.50. It's kind of what we just talked about on the daily chart anyways. This and Brigade bolt to the upside looks fine. I would expect a pullback at some point. There will be a pullback at some point, but if we're over 682.50, I would not take an overly bearish stance on this market at all. Really, like the only time I would get bearish is for an intraday scalp. Let's say we come back down into range here. If we drop the neckline of, you could start arguing left, head, right shoulder perhaps. If you break underneath the balance range lows at 679.50, there's likely a short from point A to point B. But at point B, as I've already stated, I would really change the tone there and start being more optimistic for a daily high or low after shaking out. Like in my view, it's not about allowing sellers to really take control here. It's let there be a liquidation break. Let the longs who are late to the party get punished. Liquidation break clears those traders out. Stronger longs participate here and stage some sort of low for a better rally back up towards this. Right now, once you have a daily high or low, equal high in short proximity of time, increases the odds that you go through. We're talking about all-time highs and a much more constructive look for upside in this market. We can quickly check in on some supporting evidence, starting with the Fibonacci's from low to high, just pointing out that the Fib 38.2 is still loose confluence with that key area around 675. It's not beautiful, but it is in the moving average stack. What is fairly beautiful is the 61.8 being the line in the sand here around that 664.15 level. Again, this would not be ideal, but it would technically qualify as a daily high or low. We'll deal with the complications in the future when and if that starts to emerge, but trading the chart in front of us right here, right now, let's take it one step at a time, one day at a time. This and here, if we just balance off, I wouldn't touch that with a 10-foot pole inside the range. This is maybe a quick scalp to the short side, so we could say maybe, again, that A to B trade is fine. And then when we get to B, really looking for this, consolidation, and then, something like that into the new all-time high, or making at least an equal high to the all-time high would be the follow-up. We can check in on the intraday anchored VWAPs as well, just to double check that we're not missing anything. And, I've done my homework already. Hopefully you have as well. But the entire stack is going to be right there for super support at that 675, 674 zone. Let's take a peek over at the internals for the NYSE side of things. Today's session was the day where we actually closed on the high, so I'll just go back to a daily chart here for a second. Remember that on Monday we pulled back. On Tuesday we got more of a doji doji-esque bar. So today was the day where we closed at the high, and just keep that in mind when we're thinking about internals. So Monday, Tuesday, balance wasn't like we had substantial volume outflows. We were not negative 300 million, much more balanced. I'd say that aligns with what the chart actually had for us. On today's strong close, the volume flows were quite positive, very linear move in the upward direction here, and the breadth intraday was actually sustained for the most part at a 2-to-1. If I just hide that and open this one up, you can see here 2-to-1 was sustained all day. It's not like we were battling, 1 and then -1 and then 1 and like back and forth. It was pretty solid. If we look at the advanced decline line, I've been very, very, very neutral on Monday, Tuesday. You can see today's Wednesday session. A little bit more bullish, not quite in trend higher zone, but definitely supporting the thesis that upside makes sense. And the same thing with the cumulative builds here on the tick as well. Could have been a little bit stronger out of the gates, but it was a little rough to start, just kind of sideways here, and then finally kicking into gear into the afternoon. So I'll give a little bit of the benefit of the doubt to the cumulative tick. Generally, the main point I'm trying to drive home is that we really just don't have new money sellers, even though they could have gotten involved given the way that this market broke down. On the Microsoft headline this morning, there's just no attempt from sellers to really meaningfully move markets in the downward direction. So with that, we'll take a look over at the market profile and see what this has for us. A very straightforward explanation of value, value, and value consistently moving in the upward direction. Point of control is higher, point of control is higher. You might start to say, if the market ends up finding acceptance underneath today's value area low, that would put the pressure on the situation where, yes, we break down through the 3 equal lows, then we're really dealing with that daily higher low pullback. So you could use that as an arbiter of price here around 68.44, 68.45. If you notice that the ES is trading underneath that level, it's possible that that deeper pullback may start to emerge just on the premise of kind of look above and fail. Right, the market has tried to look above these prices. It's failed. It's back to comfort. Maybe we need to break before we can rally, right? Let's take a peek over at the Nasdaq side of the market, see what's going on with our good friends, the QQQs, the multiple Qs. We could see a similar looking chart. However, the balance is over the Friday and Monday session here. You're also getting stronger closes on Monday, Tuesday, and today's Wednesday session. So as we're thinking about, again, Nvidia underperforming, the baton has clearly been passed. ASML, Applied Materials, Google as a new leader, Amazon announcing their chip, of course. So all of these things combined make me very reluctant to say, oh my God, short the market, Nvidia's, dead, as we exaggerated in the intro, right? So with that understanding, what's the next look? It's just either continued consolidation here is fine, and then this gap close above becomes a target, or just like the S&P 500, we have not found an hourly downtrend. You break these 2-day lows, you could still easily set a daily higher low here at 613. I am still willing to give the Nasdaq in particular a little bit more leeway into this level right here at 606. This aligns with 25K in the NQ futures. So if you're a futures trader, we've been tracking that level very closely in the pre-market prep. If you drop this, and let's just say that the S&P has not quite pulled back yet and the Nasdaq already finds itself here, because remember, this is a little bit more narrow. The S&P might be a little bit more resilient with the financials kind of picking up some of the slack, right? So if the S&P is just in the range when the Nasdaq is here, and then the S&P breaks range low, 3-day balance range low, so I'll just kind of use a cyan crayon to illustrate the same timing here, then I would be willing to give the Nasdaq the benefit of the doubt at 606 for some continuation that looks like this. If on an equivalent basis, and I'm just using cyan for the S&P 500, pretend this is that 675, 674 level, if those two things can coincide, I'd still remain optimistic on the QQQ Nasdaq at 606. Will there be some degree of complications here on the retest? Perhaps. I'll take that in stride. Again, when and if these charts pose these threats, I'll be evaluating intraday in real time to say, okay, does this really look like sellers are hammering it on that level retest, or do the buyers just rip right back through? If they rip right back through, then the first higher low above, I'm going to be looking long for this gap close overhead, right? Especially if it's paired with the S&P 500 holding over 674 roughly. So that's the look on the daily chart here. Let's quickly take a peek at the hourly time scale. And what do we see? So once again, on the Tuesday session, markets were unable to break down, and you could sort of partially attribute that to, in the S&P 500 at least, the Nasdaq just being so much more further above the Monday high, right? So bullish here on the previous resistance, acting as new support. Take the same Microsoft headline indications that we talked about on the S&P, apply them here in the Nasdaq. No reason to be a mega bear. If this is going to turn into a reversal pattern, maybe this starts a little bit of left, head, right shoulder. Let's not jump the gun. If this aligns with that S&P narrative we just talked about, we know how we're getting involved on the long side. I mean, this could even just come in here and hold that outright. It doesn't have to overshoot, based on the theory that we just sort of described on the daily. It could easily just hold the daily 20, the daily 50, that 613 engulfer high from here, previous resistance, right? Previous resistance turns to new support. If we can find the hourly reversal out of it, so the hourly trend has to flip down to get there. This turns into a daily higher low when and if the hourly trend can flip back to up. Low, some kind of hourly higher low, and ideally a higher high to pair with it, trying to get back into this gap overhead. So let's actually just take a closer look at the top side of the Nasdaq daily. If you were to break out over this, that gap is between 627 and 629.75. Notice that we're not quite at striking distance from the all-time high in the Nasdaq. Again, it makes sense noting that the S&P is a little bit more broad-based, and we're seeing that broader participation really show up in things like financials, which are just not included in the Nasdaq side of the market. If we jump into our, let's go with a fib from the low. Oops, let's grab a low. There we are. Up to the high. 38.2 is more on par with that 606 level, lower edge of the weekly expected move, kind of reinforcing the importance of allowing a little bit of overshoot there. If we come in with the anchored VWAPs on the intraday, what else can we learn? The stack is a little bit more bifurcated than that of the S&P 500. You're getting two of the stack up at the top and then two of the stack down at the 606, just reinforcing both of the key levels nonetheless. In terms of pathing, if I was just going to simplify this, consolidation here, let it be. Brigade bolt over 625, look for the gap close 629.75. Underneath the two equal lows, just like the S&P, you might have a short from A to B, but at point B, I would really pack it up and start looking for the reversal back to the upside. And only, if you're already short from A to B, then fine, you might monitor for continuation into, let's just say, point C here, which is that 606 key line in the sand. And then at 606, I would definitely pack it up and say, all right, that's really where ideally this Monday high from the Thanksgiving week can potentially act as newfound support, right? You got a little bit of that indication on that Tuesday follow-up session, but it would be best to get a stronger indication off of that to once again set a firm daily higher low at this point, confirming the trend reversal in the upward direction. So that's what I've got in terms of levels and the way I'm thinking about this market. Let's quickly take a look at our Nasdaq internals. You can see almost a mirror image. What I find even more compelling here is, again, think about the concept of sellers had an opportunity to offer a pullback. And notably, on Monday, you were much more bearish at the exchange level on the Nasdaq than you were the S&P 500. And then what happens on Tuesday? A subtle gap up, gap fill reversal, and we close strong. Volume flows up, advanced decline line, a weaker close there, but still really strong today, getting into trend higher zone, cumulative build, 45-degree ramp into the close. So this is not just like short squeeze. If this was short squeeze, what you would see, and you'd see this in the price action itself also, short squeeze out of the open would look like, wow, we retrace the entire Microsoft move, we go sideways, maybe liquidation break, and then rally to close like here. And you'd be left with a daily bar that might look something like this. Right? You'd also see on the cumulative build out of the tick, you'd see a big opening drive. It would flatten out and then maybe even go lower into the afternoon, right? So we don't really have short squeeze here. It does seem like new money sellers are not getting active and buyers are just, being confident in their buys here on these pullbacks to the low end of these balance ranges. Let's take a look at the Nasdaq market profile, and we'll see that value is a little bit more so overlapping to down on the Nasdaq, but again, relative to the Monday session, it's still above. So I would still use the value area low as a critical inflection point. If you notice the Nasdaq is underneath that, it could be your premature signal to say, okay, heads up, we're probably looking for an equal low breakdown underneath the two-day low here. Now, on the contrary, if the market finds itself over the point of control on the Nasdaq, you've got a really mechanical level here. Notice that you have high of day Tuesday, high of day, or it's not really day, high of overnight session headed into Wednesday, and today's Wednesday high goes right to it. That's a mechanical improper end of the auction. You really should start to see a little bit more excess there. So I would expect any consolidation over the point of control to really seek those upside prices and try to continue a breakout here from the multi-day balance range. And once again, think about the narrative of what's been in play. I know we talked about it a little bit already, but the AI rotation is still underway. We don't have those AI bubble fears anymore, and we do have the Fed U-turn still intact. And, I think we want to continue to monitor that right up until the FOMC and the updated SEP, which is going to come out a week from today, next Wednesday at 2 o'clock Eastern time. We will be live streaming that FOMC announcement. So if you want to tune in with us, it would be a fun little watch party and see what markets do. But that's kind of the runway, so to speak, in terms of the Fed U-turn and getting our next big bit of information as to how they're thinking about this market, or not really the market, but rather their dual mandate. Let's take a look over at the Russell side of the equation. where it's more apparent that the Fed U-turn is really being priced in, right? As soon as Williams, Waller, the whole 9 yards, Hassett potentially being considered as the Fed chair, I mean, small caps ripped straight to the upside. This one is undoubtedly much stronger on a relative basis than all of the other two indices that we've seen thus far, well over that Thursday engulfer high from here. I mean, just a total rip straight in the upward direction. Still a soft higher low. You didn't get an hourly downtrend there. It was just a little flip. It's more of an hourly balance. If you take a look, we opened lower. Doesn't really count, right? You never actually made a severe lower low. It would have been a lower low if today those sellers could have capitalized on the 2-day low breakdown. And then to here, we would have had a daily higher low, right? Something that looked like this would have been possible. That would have kept the bulls alive, but it didn't even need to happen, right? You can see we've closed a little bit more of a meaningful higher high relative to that Friday high, and the trend just remains in the upward direction. This is a very sharp V-shaped recovery, and as of now, you could look left. The midpoint of this balance range is acting as support. There's nothing really bearish to say about this, unless the Fed U-turns the U-turn, and in the SEP, they're all of a sudden saying, hey, we don't know about cutting rates in 2026, and maybe this is all we get, that 25 basis point cut, and inflation's a problem. If we get a Fed U-turn of the U-turn, then yeah, I suppose we could be lower here. But given what we've seen, and honestly, I'll just take a tour over here now because it seems fitting. The odds have still remained pretty elevated for the 25 basis point cut. You can see the odds here still favor eventually at some point getting down to about 275 by 300 on the rate cuts. That's going out to 27. As I'm thinking about specific information that came out today, we had the ISM services report, and primarily what we care about is the ISM, not the S&P Global. They break it out very, very cleanly. What I would just point out is look at employment. Employment was slightly stronger than the expectation. I'm not going to say they knocked it out of the park, but employment was stronger. You can see that prices paid was underneath the expectation. So inflation maybe not as much of an issue. And then demand is kind of taking a hit here with new orders down, 52.9 from 56 and down from a forecast of 56.4. So when I think about the equation here, inflation doesn't really seem to be all that big of a deal. So maybe rates can come down based on that. And employment, it's still in contraction territory. I would just also, as a context piece of information, a number sub 50 means contraction. Number over 50 means expansion. So although it's not as bad as the market was forecasting, it is still contracting, right? And of course, we did get the ADP non-farm as well this morning, a massive miss at negative 32K versus a consensus view of about 10K. You get a little bit of mixed information on this. If you look over here, forecast was seemingly 5K. Regardless, big miss on the ADP non-farm, which probably pressures, rates to come down a little bit. If the inflation metrics on ISM, because they've been, no CPI report, no PPI report, maybe we'll get PCE. I don't think the market's going to care all that much about it on Friday. But the point being is, if inflation numbers aren't as big of a deal, and yes, the labor market is substantially softer than the Fed had originally forecast, then it would make sense that the rate projection should be lower, right? And we'll get a new SEP next week, as I said. This is the SEP from September. You can see the forecast for 2026 was only a 3.4. If the Fed watch tool is telling us anything, then it should at least be a 3.1 here, right? 2026 brings us to a 3.1. So if the SEP does not outline a 3.1 adjustment on the run for 2026, that's a sign that Jerome Powell is or the Fed really as a group is intentionally a little bit more hawkish and saying like, hey, inflation may become an issue. You're seeing some interesting headlines. I'm probably not going to go digging for it right now unless I conveniently have it on another screen. Let me quickly look. Maybe not. There's some commentary about bond vigilantes basically under the premise that markets aren't too happy that Hassett, I'm just scrolling really quick to see if I can find this. Markets aren't too happy about Hassett being considered as a Fed chair, basically bending the knee to the administration and bringing down rates just for the sake of bringing down rates where is this? I know it's out here somewhere. I don't want to waste too much of your time. Oh boy. I know it's out there. There we go. Sorry. This is important. I think it's important in terms of the conversation and the context. See if I can get that to snap. All right, so no, we don't want Grok to explain. Bond investors warn Treasury over Hassett as Fed chair. The point of the exercise is that you probably want to focus on short-term rates coming down if the Fed's going to cut rates. But the longer end of the curve, 10-year plus, is going to go up, right? And that's going to be a little bit of a problem here. if bond vigilantes really step up and sell the bonds off, it's not going to be a recipe for success, really, as we're thinking about the forecast from the Fed. So that's something that's in the back of my mind. And the whole reason I'm going down this rabbit hole is because of what it means for the IWM. Another good ratio that you can watch to sort of monitor the situation there is the bond relationships in terms of duration and timing. You can see down here we have the IEF-TLT. That's your longer end of the curve versus a little bit shorter end IEF. If this ratio continues to push higher, it's telling you that the long end of the curve is moving higher because of inflation expectations and this idea that Hassett is going to lower rates perhaps too much, basically running the economy red hot. Inflation's going to boom, long end rates are going to have to combat that a little bit, and what's going to be the end result? Probably an economy that, again, is running hot GDP-wise, but also you're going to see risk on assets inflate with the dollar moving lower, right? Money managers are going to say, what am I doing hanging on to dollars? Let's throw everything we have at the market. We got to put money to work, otherwise it's going to lose value. You're going to see, a huge, dare I even say it, that's when it's possible, an asset bubble based on low rates and AI. I don't know. I don't want to be too much of a pessimist, and I certainly don't want to sound overly subjective here. I'd like to keep it objective and focus on the charts in front of us, but that's kind of the narrative that's in the back of my brain, at least when it comes to the IWM. Who knows? Maybe lower rates will ultimately save the day. We won't go through a mass unemployment layoff situation, and perhaps we avoid a recession. That's the optimistic take, right? Anyways, in terms of the IWM, it's telling us we are optimistic on lower rates. We're optimistic for the cut ultimately. You could look at Upstart, UPST as well. Hopefully I didn't lose anybody with that digging for the tweet, but Upstart looks good here, and this is just a total proxy for the premise of the Fed U-turn. If we break that trend line, forget about it. We've already broken this trend line here. Another one would just be the XHB, and then we'll just jump right into our sectors after this as well. There's no divergence happening at the exchange level for small caps. You can see XHB, right? We talked about this in the past as well, breaking the trend line, moving in the upward direction, prospect of lower rates. So that is bullish happening there. Let's get into our sector watch. We talked about XLF performing well, but on the week, who's leading? It's the SMH, semiconductors, up 4.45%. Here's a quick reminder that semiconductors, although Nvidia is still, I would say, overweight in the SMH, 17% roughly. Underneath that, we have AVGO, another clear leader emerging in the AI space. We have Applied Materials, Intel, another clear leader. Let's go INTC real quick. Intel, huge break to the upside here over the last couple of sessions. So this AI baton is being passed, and your SMH is reflecting that. The AIQ is not doing as well. AIQ, if we just take a look at this, just on a relative basis to this high as well as these highs back here. AIQ a little bit of a laggard, but SMH, you could see, is performing a bit better here. So semiconductors, nice look. If this can go any higher low over the daily 20 and 50, I would remain bullish and ultimately seek continuation or equilibrium. That's fine as well. On a weekly chart, you might just go high, equal high, low, some sort of equilibrium for a little while and then break out on the next catalyst. I don't think that equilibrium is too much in play, especially with the whole Genesis mission being announced last Tuesday as well. That's basically the government backstop on AI after Sam Altman said, this might be a national security threat, and then redacted that statement after sort of saying, we want a backstop, maybe we don't. So anyhow, Genesis mission is a positive catalyst for all of this. Let's take a look at the XLK. You can see we've got these equal highs coming in here. Again, let's try to get a little bit more objective than subjective thinking about the catalyst. Let's talk about the charts. What's really happening? So the consolidation here is bullish, right? Why? Because it's over the engulfer high from there. If we pull back, it is absolutely critical XLK finds a higher low over 279. If we don't, then we sort of lose the tailwind for the S&P. I'd be a little bit less enthused about all-time highs. Let's jump on into discretionary. It looks pretty good on a V-shaped recovery here. Put yourself in the shoes of a seller. You get this big breakdown. All you need is a lower high here. All you need is a lower high here. All you need is a lower high here. Did any of those things happen? Survey says no. As of today's close, full recapture of 236. You could pull back, and now the buyers on the flip side just want to see a higher low. So it's crazy how fast the script has changed, but it's literally that quick. XLE, not much to really comment on over here. A breakout through the highs. Maybe the CL has not yet broken through its trend line. You can see that it's been kind of battered down by that right there. So you need a change in crude, I think, before energy really gets going. If we look at industrials, sideways in the range still, I'd be interested when and if this makes new highs. Not there yet. XLF is the compelling look here. Really not rejecting this 52.90 was critical. So into the end of last week, sellers would have had something here. The fact that we're making mostly equal highs, slightly lower high. I'll give the sellers a little bit of credit there. But undoubtedly off the lows, a severe higher low, reclaiming the 50 over the 20, back in this consolidation. Just pretty tough to be bearish as financials perform well alongside semiconductors, really. As we jump on over to the XLC, and by the way, actually, let's go on over quickly. Let's go WFC breaking to new highs, Citibank breaking to new highs, Morgan Stanley breaking to new highs, Goldman Sachs getting back up there. Remember our failed breakout back here on the largest deal they've ever produced, but gunning back towards the all-time highs. JPM, although it's the largest market cap, JPM, if I could spell the ticker right, there we go, is the laggard of the bunch. So I would kind of stay away from that. The other ones look much stronger there. And once again, that is fueling the XLF in the upward direction. What's hurting it is MasterCard and Visa. Remember that these used to be in the XLK. They're now in the XLF. Probably for good reason, payment processing. But as companies, they are not nearly performing as well as those banks. That's the financials look. Let's go to communications. Type multi-day range here. I'd be compelled to see if this breaks to the upside. Meta is probably a big watch there. If we look at the TLT bond vigilantes, this isn't a dividend gap down here. If the bond vigilantes are really going to drive it home and say no to Hassett, basically, if they're going to try to vote with their dollars, then this is going to get crushed, right? They're going to sell bonds like there's no tomorrow, driving rates higher. So watch out for that. The real metric there is that they're just not going to buy bonds. So there's going to be a lack of buyers. Rates will have to go up to attract new buyers, and that's kind of the mechanic of how that comes down. Anyways, XLU, what do we have over here? Definitely an opportunity for a higher low still. This is a lightweight risk-off sector, so I'm not concerned with this at the bottom of the barrel. If we look at the XLV, it's finally cooling off after a near vertical move back to all-time highs. This is fine. Like, go back to a weekly chart on this. It's okay if this now cools off into a handle and then we get some sort of cup and handle on XLV. That's well within the realm of possibility after this massive run to the upside, right? Although we would all love if charts just did this and, continued in a straight line forever, the reality is at some point you will develop an equilibrium on the weekly chart. Maybe it's here, maybe it's not. That's not really... I'm not trying to say that it must cool off here, but I think the expectation should be after leg 1, leg 2, and a leg 3, it might be time to cool off at the all-time high, right? So I wouldn't go chasing huge long trades. It is still absolutely in an uptrend. I would sit tight in longs that you're already in. This makes me think of Lilly, of course. Makes me think, so Lilly daily 20 SMA kiss, actually. Makes me think of Merrick. Makes me think of BMY, there we go. Makes me think of ISRG. Right, this ISRG probably looks the best in terms of a new possible entry, just because of how tight it is up against the 20. And this is not one of the trade ideas, by the way, that I had planned, although it is kind of an interesting look. This might have to go on my radar now that I'm taking a look. J&J is another one that comes to mind here. Nice high and tight flag. So those names are interesting for healthcare. Let's take a peek at the staples. Staples are in a solid little spot, noting the trend reversal off the lows here. So as long as this can kind of go higher low over 77.50, I would continue to remain constructive on this. One of the larger themes in staples right now is honestly retail, which is very, very contrarian to the take that there was so much financing going on over Black Friday and the spend reports that we got from Adobe, as well as Klarna, all these buy now, pay laters. I mean, look at the XRT retail screaming to the upside. Look at Walmart screaming to the upside. Kohl's kind of had a nasty day to the downside, falling out of its flag, but you could go to Macy's, recovering from the gap down on earnings today. Urban is another one that we've been tracking and potentially swinging here out of this tight little range. AEO on earnings, big gap up. ANF is another good one to potentially keep tabs on out of this flag. There's a possible idea here. So, these kind of things are in the back of my brain. I have an additional one that's going to be part of the 7 trade ideas for you later if you're curious about that. But that's staples. They don't really look horrible here. And I think the retail spend category is a big deal as we head through the holidays. XLRE, nothing new about this. Still in the balance range, no comment. XLB, possible higher low here. It's one of the lighter weight sectors out there. Not overly concerned about it. Upward pressure is upward pressure. You're just not there yet in terms of me saying like, wow, a break over this, sure. I'd be like, great, that's super helpful for the S&P. Maybe there's something to do in materials, but right now, not really. Staging a higher low, but just inside this balance. Let's get on over to the ratio grid, and this is where maybe we take a little bit of a tone dialing back situation and say, okay, ratios this is not really risk on. It's making a curl higher. 50 SMA is still trying to stay sloping upward, but we're below it. So a rollover here would become detrimental. So not really risk on. Let's just say kind of neutral there. This is trying to form a base, maybe break the downward sloping 50. I would still need to see more follow through for that to actually be the case. So neutral for now. Discretionary is still under a downward sloping 50, neutral there. XLC doesn't really look good, flattening out under the 50. It's not really interfacing with it. So hard to say full-blown risk on, but the rotation is kind of keeping this market alive. And I would just point out as well, it's been a 3-day. It's been a 3-day balance range. So to see this kind of not doing anything insane, not the worst. I would just have expected a little bit more participation over the Thanksgiving rally, which we haven't quite seen yet. So if the market breaks to a new higher high, it would be critical that all of these start confirming the break rather than not denying, but negating some of the progress that's made. This is not telling us risk off yet. So I'm not concerned there. If we take a look at the specialized A set, some big recovery happening in the top two. XLK SHY, of course, XLK XLU. This is like getting there. This is also getting there. Not quite there on the ARC and not quite there on the more broad-based Russell 1000 indices down below. So progress in the right direction, right? It would have been a much different story if this just went lower high and rolled over to an equal low. We're not getting that. So it's hard for me to say risk off and like, let's not trust the all-time high move. We're just like looking for the market to continue confirming. Show me more confirming evidence that yes, we should trust a daily high or low. Yes, we should trust a break into that all-time high. If we go to the B set, gold is kind of just sideways here. That doesn't strike me as anything meaningful. I do find that this is kind of interesting. Once again, it is on the TLT dividend payout, kind of issuing a little bit of trouble with that gap down, but nonetheless still a positive and risk on indication for risk appetite in terms of equities, and Bitcoin even catching a little bit of a bid off of that daily double bottom over the neckline here into today's afternoon session. So risk appetite is like slowly improving, but it's just not through the roof as of right now. Let's jump into what order do we want to go next? Maybe the dollar and rates, just to check in on this. If the Hassett issue is really going to become a larger deal, watch for the 10-year. If the 10-year really starts creeping higher back to like a 4.2, that would be your stronger signal. So as of right now, it seems like mostly talk and not really action. We'll see kind of where this lands. And I think that the SEP document from the Fed will be quite telling for the 10-year next Wednesday, so a week from today. Let's go to the inverted ZT. This continues to go sideways. We know that, we already looked at the Fed watch tool. What I will do, though, is bring back up the economic calendar in terms of what we have looking forward. We can see that the PCE is coming out on Friday, as well as this consumer sentiment and inflation expectations at the 10 o'clock time frame from the University of Michigan. That's a big deal. The market's probably going to key into this more so than the PCE. So I would watch this number very closely. Where is the inflation expectation for this month? And the preliminary number is always more important than the revision. Let's take a look over at the earnings calendar. Salesforce, slight gap up last I looked overnight, and Snowflake kind of getting hit in the downward direction. I'd say Rubrik, honorable mention, Sentinel, maybe ChargePoint. No, forget about ChargePoint. Maybe Ulta in terms of that retail spend. DocuSign, maybe. Kind of a thing of the past, though. And that's the earnings calendar. VSCO could also hit the sort of watch from a retail spend perspective, Victoria's Secret there. So let's get back over to the platform. We've already looked at some of our bond relationship charts already, so we won't go back to that, but we will go to credit spreads. These proxies are getting better, especially here on the bottom. This is the shorter term duration, so SHY, HYG. If this continues to roll over here, that would be bullish for risk appetite. We'll give this one the benefit of the doubt that it will play catch up eventually, but if this perks up, that would be a red flag. So still watching this very closely. For now, it seems to be neutral to bullish. If we take a look at the HYG in isolation, big shout out to Paul B. You guys know Paul B. He's a staple up here in the office. You see him in the morning show and around the channel every now and then. Let's not go LQD. Let's go SPX. There we go. The one thing to just point out is that some of this bearish divergence that we're getting on the HYG is caused by the dividend payout, right? This big move lower is impacting, of course, the HYG price there. And it looks like a big lower high versus, of course, this higher high and sort of equalish high into the SPX. One thing I'll just say, and again, I've got to do a little bit of digging on this, but this to this is a dividend payout, and that also was the precursor to some of this downdraft that we had here, and of course the continuation. So I am still a little bit fond of maybe reading into the divergence. If you adjust and just say we don't want dividends, no dividends at all. We want all. Not none, all. Let's go the other way. Let's go to all dividends. There we go. Let's give that a second to load. It's going to look funky with those red lines, but it's actually making a higher high as well, right? So a little bit of, I think it's worth, what do we want to do? From here to here, confirmed upside. From here to here was down. I mean, it's still, so maybe from here to here, I guess is what I'm getting at. This is down versus this is from here to here is still up. There. Anyways, real-time analysis trying to figure this out. It's something to pay attention to. I still think the divergence is keeping me cautiously optimistic about the S&P 500. So for now, bullish till proven otherwise. This is, and again, one thing I would say to reinforce this is the HYG divergence is one data point among how many data points we've already looked at? Too many for me to even count. I mean, the S&P sectors alone are 11, plus the SMH and TLT is going to bump that even further. So one data point that might be a little bit hesitant. If we look at breadth, nice improvement through the week thus far, especially on today's session. New highs versus lows, notably positive. If we look at the RSP, continues to look good in this flag here. If this can break out, that would be incredibly bullish. Again, speaks to the broadening nature of the S&P rally, which we know based on looking through the sectors already. So this is confirming. All right, let's take a peek over at the Nasdaq equal weight. Strong look over here, getting much better follow through on today's session. And, we could thank what? We could thank the fact that Nvidia is not overweight in the equal weight index, right? There's this broadening out of what's going on. So that's pretty solid. Let's take a look at volatility, which has been getting crushed recently. VIX down and the VVIX as well. I'll just type that one in. Geez, it would have taken less time to hit the button. VVIX also down here. If we take a look over at the vol futures, the one-day vol, everything is in a deep contango here. One-day vol coming into that 745, scratching at it. Not quite there yet, but very, very close. Wouldn't be unreasonable. Here's one thing that I just pointed out with the group. I'll share this little insight with you as well. If we jump into the front and back month volatility, we're approaching a spot where it wouldn't be unreasonable for this to start coming into zero. You don't apply classical technical analysis here, but as an oscillator, kind of thinking of it that way, how extreme do contangos get? How extreme do backwardations get? We typically don't stay up here around a 4 all the time. So, a little perk up in volatility wouldn't be unreasonable, something to ruffle the feathers. How would that happen? I think a basic pullback in the S&P 500 could easily cause that pullback in the VIX 9-day versus the monthly that we're talking about on this particular grid. So that is what we've got over there. I'll just reset this for tomorrow over to here, and then we'll get into our core list of companies. Nvidia, we've talked about it already. It is getting beaten and battered underneath the daily 50, the daily 20, underneath the previous breakout point, well underneath the earnings gap up high. It really doesn't strike me as a top opportunity here. Maybe if it can build something out more constructive, I'll be optimistic in the future on some thin structure retracement. But for now, you can see that we've got this back-to-back, inverted hammer look at the midpoint of what I would consider a new range. If you break underneath 179, you're just talking about an equal low to that low. Here it is on the hourly chart. So I'd be treating this as descending triangle. If we get this Brigade bolt, money flows out of Nvidia. Maybe it goes to ASML, maybe it goes to AMAT, maybe it goes to MU, maybe it goes to something like a TSM. Who knows what it goes to? But the semiconductor trade is still rotating and it's still bullish. And Nvidia, let's see if we get that, right? And what's another reason why people may be diversifying away from Nvidia? Well, we just saw the release of Amazon and their new chips, right? We know that Google's TPUs are becoming competitive as of right now. So, I'm not going to pretend to be an expert in all this stuff, but the market's clearly responding to that. That's why Google's on a rally. It's why Amazon's on a rally. And Nvidia is just stuck, right? So, just let the price action tell you the narrative. If this takes this out, I think that money's flowing to other places in the AI trade out of Nvidia. Let's jump on over to Apple. Looks great. It looks absolutely fantastic. Big break to new all-time highs out of this really tight consolidation. If this can pull back and offer daily Brigade bolt here, anywhere over 279.10, previous all-time high 277, really, really strong opportunity there for an Apple daily high or low. I'm really interested in watching that, especially because this is a thin structure retracement. Can we get this move into that zone? I'll be waiting patiently to see if we get longs out of that level. Let's take a look over at Microsoft. Not the best daily close. Look at this daily bar, nasty inverted hammer. For the sake of just kind of, I've talked about it, so I might as well keep talking about it. I did add some more to Microsoft on the swing trade shares that I'm holding. No options positions here. I'm not battling fade. I'm not fighting the clock, but just generally trying to get positioned close to the daily 200 if this is going to go for some kind of recovery effort. Again, today's daily close is not all that compelling. We'll see if I end up having to stop out of this on some sort of break underneath the 200, losing that. I'm not blind here. Of course, this does look like a lower high and possibility for downside continuation. The reason that I'm sort of giving it a shot here is because of the weekly narrative, right? This weekly previous all-time high now acting as potential support. The trouble is, and we've talked about this in the past, it's a reasonable threat to acknowledge, you're stuck between a rock and a hard place. Is the double top neckline going to act as that daily lower high? And is Nvidia, not Nvidia, but rather Microsoft going to move and slide in the downward direction, losing ultimately that daily 200 SMA? So we shall see. But for now, I think the risk is worth the reward. And we'll just, it's just another trade in the book. That's all. So daily chart doesn't look good. In terms of what's up for tomorrow, I would just, although I don't want to fight the bias I have on swing shares, I mean, that's totally within the cards, right? That is not unreasonable to about 476s. You can see in the after hours we're, 478 by 479, let's call it, or rather just closer to 479. So a little bit higher, kind of right around in here. It doesn't change or unwind all of the damage done from that afternoon closing bar. Kind of interesting with the whole catalyst thing this morning, but for now, again, this is kind of reasonable. What I would like to see is maybe this turns into a double bottom this way. That's possible. Over the neckline would be far more compelling for strength. If this, ideally the pattern is this, higher low, double bottom over the same neckline, but just taking it day by day. And if this does start to work its way back higher, then awesome, no change to the shares, and maybe even looking for longs over that high if we can unwind some of that short that was put on into the close. Let's keep rocking and rolling. What's going on with Nancy? Let's go out to a daily chart here. Again, for anybody who's following along, I had a swing shares position on Amazon. I sold it into that chip news, only holding about a quarter of those shares left from basically an entry literally off the daily 200. So that's almost a mirror image of what I'm trying to accomplish in Microsoft here. So only holding a quarter of shares left, and I'd still love to see this. I would add back into Amazon if we could hold the daily 50 over 227. Midpoint of the range, yes, but that's a clear daily high or low, as well as on the hourly chart, it was a multi-day high breakout, 1, 2, and 3. If we pull back and hold, awesome. I would really, look to add here, retarget the same level, and then hold maybe half the position for a potential higher high. We shall see. This is a no-joke daily level. It's the previous all-time high from off to the left. It's this. It's also the pullback low for the sort of, I would call it a fake bounce, if you will, on Amazon on the earnings pullback. So 238.75 is a big deal. Definitely going to be respectful of that level. Something I find interesting is that even on the chip news from Amazon, that marked a euphoric high and the market did not break out, right? If you watched that breakout intraday, you would have known, right, that as soon as we saw that news hit the tape, Amazon squeezed to the upside and then boom, it was dead, right? So selling here to trim out a lot of that position was probably a good call in hindsight. But I guess the point being is that it's not responding favorably to the catalyst. It's not like we held that gain. It's not like we're still sitting here at the highs ready to break it and continue. It's not like we got a bull flag out of the deal and then we're looking for higher. I still think I'm a bit more constructive on the higher low, but only time will tell as to whether or not this, like Microsoft, maybe sets the threat for a lower high here and it's game over. I still think there's plenty of breathing room. There's still plenty of meat on the bone, but I'll stop waxing poetic about my position. Let's keep going with Google's daily chart. This looks great. I'd love to establish a position on Google, look below and fail on 317. Something that looks like this would be quite nice into the highs and then possibly overnight all-time high 333. This continues to reinforce that sellers are not here, continues to reinforce new leaders in the AI space. If this does end up going lower high and something in here, I would be less compelled about a short and more compelled about a higher low opportunity, hopefully with a daily 20 SMA meeting us there around 304 gap fill reversal. Let's go to Broadcom, another AI leader. Daily hammer looks absolutely phenomenal off of the previous pivot high from here, this as well as this. You can see we've got 372.25, and as long as we can kind of hold in there, I'm open-minded to like bull flag here and Brigade bolts back to all-time highs being a potential outlook for Broadcom just on the hold of that level, right? Nice rally, pullback. This is like classic Brigade bolt stuff on the daily time frame. Let's see if we can get a pre-earnings run-up. They do report on, I think it's Wednesday after the close. That's going to be the FOMC day as well. So Broadcom looking good daily hammer. Let's keep moving. Meta's got that XLC look, of course, so really tight 4-day balance range now, over the highs, under the lows. I could see this going either way. I would be partial to both, right? So I guess that means I would be impartial. Doesn't matter which way it goes, but exiting the range, you have thin structure above, you got thin structure below. I'm really, on the short side, most interested in this, so maybe I would be partial to that. Underneath that 628.30. If you drop that, you're really rotating through this thin structure, and 604 seems like a reasonable target. The reason I don't have a swing position on for Meta is that we're under the daily 200. This lost the 200 on the earnings gap down. It was coming from a much weaker place. Instead of coming from an already gapped up earnings session here and then like, maybe we support the 200, it was sideways and then lower through it. So that's, just in terms of like paying attention to what's what and where is their strength, where's they're not. I know it's got a similar V-shaped recovery off the lows. I get it, but it's got, in the grand scheme of things, a much weaker chart than that of Microsoft or Amazon even. Let's take a look at Tesla. Let's take a peek over here. Looking for a day 2 follow through out of this tight balance, breaking to the upside. Most importantly, reclaiming this 440 area. If we take a look at the hourly chart, a little sloppy on that Tuesday session. Upper wicks failing, lower wicks failing, caught between a rock and a hard place, daily 50, daily 20. If this can stay over 440, this flag, then becomes interesting for maybe something along these lines towards that 470.75. I do want to still be mindful that this is a junk drawer, and best trades don't come from the middle of a junk drawer. Usually they come from exiting the junk drawer. So still being patient for that all-time high break is something that's on my radar, possibly early 2026. We'll see what catalysts are in the pipeline ultimately for Tesla. JP Morgan, we talked about loosely already. Not interested in this chart. There are other banks that look better. Palantir struck me as being surprising today. I was a little bit more open-minded to the downside, rejecting this overhead supply, staying under the 20, under the 50, especially with the Microsoft headline. Remember that, it seemed to me that Palantir would have had more of an opportunity to move lower rather than semiconductors or like hardware, seeing that it's a software sort of product as well, but it just didn't. Nice bullish engulfer. You got to give the bulls credit where credit is due. Taking a look at the hourly chart, not the best close with this indecisive doji on, like, I wouldn't call it a blow off top, but kind of a spurt into the close with a lack of confidence on the close. But consolidation, maybe continuation. It's in a junk drawer as well, similar to Tesla. I have to remind myself that the best trades don't come from this. The best trades will come from clearing that and then getting, into a much better uptrend. So we shall see. Palantir not in love with it. Let's move along to AMD. AMD failing to go lower under the 3-day low. This is actually, I took a trade on AMD short underneath this low and quickly had to stop out on a snapback back above. So is it look below and fail on the 3-day low? Possibly. Consolidation here. Do I want to be long into the moving average stack above and still this heavy overhead supply? I don't love that. I really don't. I mean, you could kind of see that, right? The best day to be short, I guess, would have been the stretch on Tuesday up into the level. So no follow through to the downside. And I think for me, it's kind of on ice looking for the next setup. It's very possible that we start to build out a higher low. I'd like to see something like this, though, and a big reclaim of that 226.65. Let's take a look at Robinhood. Robinhood, nice break in the upward direction. Nice little intraday flag there over the 129.25 into the daily 50 as a target. Pretty nice. If we take a look at the hourly chart, you can see the 4-day range here. Nice continuation grind in the upward direction. That's one thing I'll just end off with on the core list is that a lot of these names have been grinding intraday. If you're positioned in like 0-day options, it's going to be pretty rough to hold on to that through some of the ebbs and flows. If you just take a look at like the 5-minute, big momentum push, there was no symmetry on the move. It's not like you got a big second momentum push. It was a little bit higher, sideways. A little bit higher, sideways, right? This was a pretty nice rally through there. But the point being is make sure you're positioned appropriately, not using 0 days, or if you do use 0 days, just size accordingly, where if theta really beats you up, you're in an okay spot and not going to lose too much of the account if you get the right move, but your timing is ultimately incorrect, right? So that's the final warning there. Let's take a peek over at 7 additional ideas. CrowdStrike is the first. They just reported earnings, and what we can see here is a nice bullish engulfer at the daily 20. I think there's an opportunity for 2 things to happen. Either a pullback, and I should honestly have this level in here as well at about 518, we'll say. If we could hold 518 on consolidation, that looks pretty good. We are slightly lower in the after hours. It's a little spready, but slightly lower. If we could put in a resting bar on Thursday and then break out on Friday, that would be a pretty nice move over 524.50 into 534. So I don't know that it's actionable quite yet, but a quick little pullback to then break to here, this high, that to me makes sense on the earnings strength. This gap down and then engulf the entire session, right? So that looks pretty good. That's CrowdStrike. Next up is LULU. Believe it or not, LULU is, it's interesting. The reason I like it is because of this retail theme, and this is not the retail name that I was thinking about earlier, but it just strikes me that we now have 2. The reason the only reason this is on maybe a watch list is a pre-earnings run ahead of some of the holiday sort of sentiment. You can see the strength here, building a little bit of a flag. If you crack this high, you have a gap to close above, and you've made equal lows, right? You are no longer in the process. I'll go to the weekly chart. You're no longer just like dying on LULU every single week. You finally started to build a little bit of a base. Is it the strongest base I've ever seen? Absolutely not. Are we still in an aggressive downtrend? I would argue yes on the higher time frames. Is the daily trying to neutralize here? Maybe. I think there's an opportunity for a scalp, and that's about it. Out of LULU, over 186.85 into 197.40. You could monitor for continuation, but it's really about this gap close overhead on possible positive sentiment, buy the rumor, sell the news ahead of earnings. Let's go GMED up next. GMED on a pullback to this 87. Stay away from options on this. This is a shares only trade, but a pretty structured pullback after a break. It's just a classic Brigade bolt, right? Brigade bolt here. Can we continue in the upward direction? So watching 87, no signs to buy this yet, but just keeping a close eye on it. Let's move on to Quantum. Believe it or not, IONQ is going to hit my radar. Excuse me. Apologies. We've got ourselves inverted head and shoulders off the daily 200, and I like the possibility of a 20 SMA break here for a retracement into really these lows first, 52.75, and then this high from the high volume close. The reason I'm interested in this is because this level is confluence with this breakout point from the consolidation, through the summer and then into early September. So if we can, this is sort of like a look below and fail on the breakout. If this goes inverted head and shoulders, I think there's room for a move. The reason I say this is if you look at QUBT, is it? Yeah, QBTS. D-Wave, there it is. D-Wave started it. D-Wave has already started the breakout here. It closed over the 20. Rigetti has not done it yet. RGTI. But not bad. I mean, not bad. This really put in an intraday reversal. It was looking horrible on the Monday, Tuesday session, but today's reversal back to the top side. I'm not going to say this is like a knock it out of the park trade, but if retail is really going to, get involved on this quantum again, I think IONQ is the place to look because of the importance of this level here at 48.35 roughly. So watching for an entry, it might be slightly higher than that, like 49 could fly, 49.25, 49.50. If you want the precise level, what do we have on the hourly? Just quickly hammer one out. 50.25. 50.25, if we could break that with some confidence, over the 20, looking for that retracement. So watching that inverted head and shoulders, IONQ. Let's take a peek at EQT. EQT, this is, of course, the natural gas. If we can jump out of this as a nice rounded base, equal high reattempt in short proximity of time after a higher low over the moving average stack, looks pretty good. This is all-time highs. Over 61.15, let's just round that off. You guys know me, round numbers only. Over that, and we're really talking about a continuation move into, again, blue sky territories. Looks good on EQT. ROST is the next one. ROST stores, new all-time highs over 178.65. Inside candles on the first flag out of this, all-time highs? Let me double check. Let me not get too crazy here. Yeah, it is all-time highs. All-time highs out of the first flag after, what do we want? Daily chart. After this earnings gap and go, right? So really nice inside consolidation. If it breaks, let's see if it can put on a show. That is ROST. And finally, let's go AMGN, AMGN. This is going to have some weird text on it. We can kind of get rid of that at this point. Let's remove. Let's get rid of that. Look at this high tight flag happening here, flat top base. This was flag 1 out of it. This is sort of flag 2. We know that healthcare has been a nice theme. Drug makers, Merrick, Johnson & Johnson, the whole 9 yards. So AMGN up and over 345. Let me also double check. Is this new highs here? I think it's very close. It's got to be new record highs if that breaks. So let's go max available. Let's just change this to a quarter chart. Yeah. Yep, new all-time highs out of Amgen if that can officially go. And thematically, it fits the bill with these healthcare names really performing well. So if this is going to go, there you have it. Up and over 340. Let's call it 346 for round number sake. 346. Done. All right, and that is going to do it for today's installation of the Midweek Market Update. If you enjoyed the video or learned anything new, let me know down below in the comment section or by giving the video a very simple thumbs up. Hopefully I didn't lose too many people on the search for that Bond Vigilante tweet, but if I did, hey, it's their loss, and now you have all these additional trade ideas to head on into the end of the week with. With that said, have yourself a green trading week. We'll be live tomorrow morning up here in the office at 8 o'clock Eastern time for a pre-market prep episode, and we'll be live Friday as well, so I hope to see you there. Have a green trading week, and as always, I will see you in the next one.